Hello everyone, it's Linda in Belize. Right now I'm in Edmonton waiting for my flight going back to Belize in January. And what I want to do today is talk about tax information for owning property in Belize. So I'm going to give some general points about taxation if you have property in Belize, but I'm not a specialist in income tax even though I teach it. So make sure you always talk to your accountant about your specific tax situation because every person is different. So most of my videos are about Belize and real estate since I'm a real estate investor and help people navigate Belize. However, I also teach accounting and tax and recently had a question from a client on how tax would work if they were to buy property in Belize as a Canadian. And I'm also going to compare it to how it works in the US. So the first thing I want to talk about is how taxes are imposed in the different countries. So there's different ways a country can decide to tax people. So some countries decide to tax based on residency. Other countries could choose citizenship, or they could choose to tax only on income earned in the country, no matter who it was. So in Canada, it is the residency way. So if you're a resident of Canada, you'd be taxed on your worldwide income. So even if you had income from other countries, you still have to put it on your Canadian tax return. And then there are foreign tax credits available so that you're not double taxed. Now, if you're a non-resident, then you'd be subject generally to the tax on your income from Canadian sources. So that's how it works in Canada. So the US has taxation actually based on citizenship, which is uncommon. And so that means that citizens and residences are both taxed on worldwide income. And so if you're a citizen in the US, even if you live somewhere else, you can't be a non-resident, which would make you pay no tax. Now, there are some other provisions I'm not going to get into here. One of those is around living outside of the US and having an exemption for an income up to a certain amount. But in Canada, like I said, we can live outside of Canada and be able to be a non-resident, which isn't the case if you are an American and you still have your citizenship. Now, the US is the only developed country that taxes based on citizenship, and there has been talk of doing it based on residency, but nothing has changed. So Belize taxation is based on income earned in Belize, which means it's a territorial tax system. And tax between countries is one reason a lot of companies with remote workers won't let workers work in a different country other than their own. So for example, if you have a company in Canada you're working for, but you're an American, most times the Canadian company will actually have to withhold some tax and remit it to the IRS because the IRS is worried that the person will not file tax also in the US. And so in Belize, there isn't an issue with that because of the territorial tax system. So if I was working for a company in Canada in Belize, I do not have to claim that income in my Belize tax return, even as a resident of Belize. So now let's talk about the capital gains tax. So first of all, let's talk about what a capital gain is. So if you had bought a rental property for $100,000 and then later sold it for $150,000, that would mean that you made $50,000 profit when you sold the house. Now, in some countries, that could be taxed based on the whole gain of $50,000. In Canada, however, we're taxed based on 50% of that gain. So you'd pay tax on $25,000 in my example where you had a $50,000 capital gain. If you're in the US, capital gains are taxed at 20%. Now, a lot of videos talk about the great fact that Belize has no capital gains tax, and that's true. That is a great thing, but as a Canadian or American, we would still be paying tax on the capital gain in our home countries. Now, there are ways to get around that, which I'll talk about next, but generally speaking, we're still going to be taxed at the rate we have to in our own country. Now, let's just talk about how the tax integration works for capital gains. So, for example, if I bought property in a country that paid capital gains tax based on 20% of the gain, and I was an American, well, then I wouldn't pay any extra American tax because I already paid 20% in the country where the property was. I would put that on my US tax return and also get a tax credit, which means there would be no additional tax paying. So basically, every country you own property in, you have to assess what the rates are and then bring that income into your home country tax return. So now let's talk about tax integration. If you earn income in Belize, you first pay tax in Belize, then you take your income from Belize, translate it into dollars, and then put it on your US or Canadian tax return. Now, generally, countries will have tax credits available for foreign tax paid to avoid double taxation. So, again, if I had income in Belize and income in Canada, I would first take that income in Belize, pay tax there. Then I would take that income, put it in my Canadian tax return, and hopefully get a tax credit on it. And in the case where the tax rates were the same in both countries, it wouldn't really make a difference. But of course, that is not the case. So now let's talk about a few components of the Belize tax system. So in terms of Belize income tax, it's different than it is in Canada and the US. It's basically based on total revenue or receipts, whereas in Canada and the US, you get to deduct expenses such as interest, property tax, and insurance. And so if you look at the internet on the Belize tax guide for business, it shows you that if you have monthly receipts from rent and other items there, from real property that's $800 or more, you must pay tax of the basically in the amount of 3% per month. And then also on top of that, for tourist rentals, which are generally short term, there's also the hotel tax to consider. Now, for the tax ID, it takes a very long time to get, and that's what's taking my hotel license so long. And my property manager used to actually help with this, but she's actually said she's not doing this any longer because it's such an onerous process. So this is where you might need to talk to a specialized accountant to help with getting this done. So of course, there are some tax planning strategies you can use to help reduce your capital gains tax in the US. There, you're allowed to buy property in Belize using your retirement account. And the reason you might do this is because the transactions, the income is going to flow into your US IRA tax-free if you have a Roth, and it'll be tax deferred if you have a more traditional account. I do have a friend who did this, and it did take quite a long time to close the property because she had to get this set up with her retirement account correct. So if you're considering this method, first of all, make sure you talk to a specialist in this area in the US and start the planning to get this in the proper form before you even find a property you like, because that will help the process go much more smoothly. Other thing to note is that you cannot use this for any personal residences. It has to be a real estate investment, and you can have no personal use component. So if you're looking for something like a lot of people to come down and stay part of the year or move here, then this strategy will not work for you. Now let's talk about tax planning for us Canadians who are buying property in Belize. The unfortunate thing is that in Canada, we're not allowed to buy property in our retirement account. And some people say, but wait, we can hold mortgages in our retirement account for other people's property, which is true, but unfortunately, we can only do that for Canadian properties. Now, depending on your situation, if you are planning to live most of the time in another country, like full-time or even just coming back occasionally, you may be able to become a non-resident for tax purposes. So this doesn't mean you're going to become you're not going to give up your citizenship or anything like that. It just means you're not going to have to be taxed on worldwide income. So if you kept a little bit in Canada where you still could qualify as a non-resident, you would only pay tax on income earned in Canada. Now there's a whole checklist of items basically to determine if you've gotten rid of your ties to Canada. And it's not a check mark like 3 out of 5. So there's a lot of judgment in this area. So make sure you get in touch with an accountant that's experienced in this area before you go that route. Another tax planning strategy is often in basically having a corporation. But again, this can be more expensive. So always get advice based on your specific situation. So thanks for watching. If you're thinking of exploring Belize, look at our next Explore with Linda tour. We're halfway through our first one where we already finished Placencia and Hopkins, and now we're in San Pedro. I'm going to be posting a lot of great videos on interviews with people who've already made the move, as well as people that have experienced the tour. So make sure if you haven't done so already, you subscribe, and I hope to meet you soon in Belize.